How do you read the summary of economic projections? It's very easy once you know how. So the summary of economic projections, you have this table here. And what the Fed say is where they expect GDP to be 2025, 2026, 2027. So in December, they saw it at 2.1% for 2025. And look, in the last decision we just had in March, they say now they see it at 1.7%. So straight away they see slower growth. Same for 2026, same for 2027. So Fed are telling you we see slower growth ahead. Unemployment rate, it's the same across the board, apart from the near term, they see slightly weaker jobs market. So it just shows, look, slowing growth, slightly weaker jobs market, and look, inflation higher than the previous projection for 2.7% for the PCE, 2.8 for December. Look at that. So they see higher inflation, and that means a slight sort of kind of stagflationary print, slowing growth, higher inflation. If that trend continues on, that will be a concern. But it's not in a stagflation situation yet by any means, and the US economy is still crucially growing. And a lot of this is based on tariff trade fears and uncertainty. The Fed's got to try to factor in this uncertainty about the impact of tariffs when no one really knows exactly what the impact will be. So they've got a difficult job on their hands. And interest rate projections, look, they see at 3.4 for 2026, 3.1 for 2027, 3.9 for 2025. So 2 rate cuts this year. Still see 2 rate cuts this year that they did in December. So that tells you, right, what the Fed are thinking about their perceived path going forward. So that's how you read the summary of economic projections. Very simple and easy to read. And the market will often move based on interpreting these different projections. The dot plot obviously gets the headlines where they see interest rates going, but you can't ignore inflation, can't ignore employment, and you can't ignore GDP. It all factors into the growth and inflation story that central banks is their main focus.